Hi, this is Kyle Markham with International Futures Group, a division of EFG Group in Chicago. I want to give you some comments on today's grain trade for June the 2nd. Today's a Tuesday. Start with corn. Let's start with the dollar. When the market was paused in between the biscuit break and the reopen today, you saw a very significant and dramatic sell-off in the dollar. I use those words because of the speed at which it happened. You saw June dollar fell anywhere from a half to a full penny, literally in a matter of moments. Obviously, you saw euro was up 200 ticks. We've got a lot of back and forth with Greece as to what's going to happen with their restructuring plan. Are they going to get things taken care of? Are they going to make their payments, etc.? So the currency trade's been ever more violent. I think today's move in the dollar is indicative of a little bit of a one-sided trade. Whenever something moves that dramatically, generally I look at it and think boat was a bit heavy on one side. We'll see. Let's remember, U.S. dollar was down at 94, looked like it had topped out, and all of a sudden we're back to 98 in no time. So to me, still the cleanest shirt in the dirty laundry, but if we could see the dollar continue to move lower, it's going to be beneficial to the grain market. Corn had a decent day yesterday, very firm today, up 6 3/4 cents. Let's not forget how close we got to those October lows at 346 3/4 in the June contract, or the July contract, excuse me. At that moment in time, the bearish noise was very loud in my humble opinion. Let's not get away from the fact the crop still looks good, the weather looks favorable. Nothing's really changed fundamentally. We do have a fund position in there that I think is somewhere between 30 and 40,000 from a record short position. My humble opinion, it's a bit of a poor time to do that because so much can happen to this crop and there's so much time before it's in the bin. We're not going to get ahead of ourselves at this moment. Corn, on the daily charts, certainly the stochastics are telling you that there's more room to the upside. I think you're going to need pressure in the dollar and you're going to need wheat to show leadership. Wheat again rallies back, right? We're down at what, 474 yesterday, and here we are today nearing that 515 level. So we've had a big move. Kansas City and Minneapolis are leading the way, which is what we would prefer to see. The good thing about the wheat trade today was, even though we eased it on the open, once the buyers came in, they stayed there. We closed strong, and the charts are looking like they do want to at least move higher in the near term. I don't think that we have a dramatic upside, at least in the next couple of days, just because we went home a little bit high on some of the stochastics on 30 and 60-minute charts. We'll see. You need the Kansas City and Minneapolis markets to be the leader. Of course, we've had that frost event in the northern plains as well as up into Canada. We'll see. If anything has happened in these last couple weeks, these bursts in the wheat market have been sold, and consistently you've had people saying, when are the funds gonna get spooked? They haven't. We'll see if tomorrow shows us anything different. Real quickly on the bean market, you've had this event where meal was lagging. Meal finally catches up yesterday, down almost $10, and then it opens up higher last night and never looks back. So that's really impressionable to me. If meal can sustain the lows we saw yesterday for some time, I think we're going to continue to move higher in the near term. July beans look like they want to get up to perhaps 950 here initially, and that's going to put probably November's at 925. The fundamental scenario on soybeans has not changed. The Argentine strike has disappeared, but we've also got what I consider to be a little bit of a one-sided trade. The question becomes, who do you know is not short soybeans? And until we rectify that, until we get the guys that were selling it in the hole, you need to be careful in here. If we get up and get another 10 cents on the November, I would imagine the sellers are going to come back out because fundamentally the attitude is they're going to continue to go quite a bit lower. Good thing today, though, bean oil was calming and was not the leader. It wasn't actually higher at all, and I think that that's supportive. So we got a bunch of currency stuff going on. We've got a lot of shorts in both corn, wheat, and soybeans. No change in the fundamentals. Doesn't mean this market can't push higher in the interim, especially when you look at those daily charts and you got stochastics that are really, for all three, pointing higher. So that's all we have for today. Again, I'm Kyle Markham with International Futures Group in Chicago, a division of EFG Group. Give us a call if you got any questions. Thank you.